And good evening. This is Mottek On Money. We are doing it live here in the 5 o'clock hour, Yabba Dabba Doo time. We get right down to business here with the news-driven hour and the heart of drive time. Mottek On Money 5 nights a week for you, right here live on the air on 790 KBC, online streaming live at kbc.com, and your on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all your favorite podcast platforms. Rough day for the stock market, especially the tech names. Tech stocks tanked, with the NASDAQ falling into correction territory. That is a drop of 10% or more from its most recent high. The NASDAQ falling into its 70th correction in market history, for those keeping track, as surging long-term benchmark Treasury yields increased borrowing costs and weighed on tech stocks. Historically, we've seen when interest rates go up, tech stocks go down. One exception today, Endeavor stock up 25% after Silver Lake announced plans to take the entertainment company private. Looks like the earnings news from tech behemoths Alphabet and Microsoft delivering a mixed picture of earnings today, and some of those big tech names moved lower, including Alphabet shares, the parent company of Google, tumbling more than 9% as its cloud business missed analyst expectations. We're also watching shares of Apple and Amazon moving lower as well. Apple down just over 1%. Amazon shares down nearly 6%. We're getting Amazon earnings, by the way, tomorrow afternoon. Stocks ending the day lower, with the Dow down 105 points at the closing bell at 33,036. The S&P 500 slid at 61 to 4,187. And the NASDAQ down 319 points at 12,821. The yield in the 10-year note, which impacts the fixed-rate mortgage rate, still uncomfortably high at 4.95%. That's the one that impacts the fixed-rate mortgage rates out there. Gold has been edging higher, pulling back now about $3 at $1,992 an ounce. Bitcoin has had quite a couple of days. Right now, hovering at about $34,505, down nearly $200 here at the moment. Let's bring in the expert now, money manager Ken Winans, president of Winans Investment. Also author of Investment Atlas 1 and 2. He's a market historian and also a Forbes magazine contributor. Ken, thank you very much for taking the call here. Give us your assessment here of this rough day for the market and the high-flying tech names getting their wings clipped here today.
Well, Frank, first off, if everybody in the audience wants a surefire indicator of when the stock market's going to do poorly, just find out when I'm out of town. I swear every time I travel on a vacation, right now I'm in Philadelphia at the Charles Schwab conference, which I'll talk about in a moment because it's been very interesting. But no, it's the middle of earnings season, and we knew going into it that there was going to be a mixed bag. And, I mean, a very good example, Microsoft closed up today. Google or Alphabet ended up just getting hammered. And we have a lot more earnings coming out tomorrow, Friday, and a good part of next week. But there is actually some good news. When I look at certainly the stocks that I target, one of the groups that have been under a lot of pressure for a good part of the year had been retailers. Well, lo and behold, looking at a lot of the retailers that I target, they were actually up or even on the day. So as we go into the holiday season, especially the months of November, December, January, typically are biased towards a positive market. Some of the players that you would expect to see participate in that situation are beginning to show signs of life. But again, we have a lot of earnings to come.
All right. Some of the high-flying names, including some of those in the Magnificent Seven, not so magnificent today. What about those names?
Well, here's the thing that everybody has to remember, that when we look at the overall market, and the broader case of the market is what we call the breadth, which is every stock that trades on the NASDAQ and the New York Stock Exchange, regardless of the name and regardless of the weighting they might be in an index, when we look at that, there are more companies below their 200-day moving average than above. And you had a handful of names that had basically allowed the NASDAQ to even now still have a positive year, but in saying that, nowhere near their all-time highs of December 2021. So the fact that those names are giving back quite a bit on less than perfect earnings is what it actually makes the market healthy. And it gives people that might want those shares a buying opportunity. But Frank, as you brought up, there is so much geopolitical noise out there. There's a lot of noise out there about rising interest rates. And certainly, we are going through the grand readjustment historically from those ridiculously low interest rates that we had for well over a decade to now accepting reality that rates are, money costs money to have. certainly to borrow it. You don't get it for free. And unfortunately, the readjustment's also going to continue as our government at both the state and the federal level are going to have to figure out ways to basically pay for the increased borrowing cost without disrupting government services. And that is going to probably take a good part of the next year and a half for them to figure that out.
Right now, we finally have a House Speaker, so it looks like the House is back in business. I don't know if you saw this report, Ken Winans, but the Treasury Department dropped what's being described as a financial bomb today. The deficit for fiscal year 2023 was $1.7 trillion, up 23% in a single year, as the Treasury used $879 billion just to service the federal debt at this point. At what point will that number be significant enough to impact things here?
Well, one of the things that's been talking at the Schwab conference is they've had people coming in from Washington, and something that, I had even forgotten about it, and I think many of the members of the audience had as well. The Trump tax cuts were not permanent. They have an expiration date in 2025. And so, unfortunately, a lot of people in Washington are not necessarily taking this real serious. Their attitude is the age-old argument, hey, just let the tax cuts expire. We'll have taxes go up and we'll pay for it that way. But I think it goes to show that next year's election is going to be very important on a lot of levels. And we do have to get very serious about the spending binge that this government has been on really since the beginning of the century. Whether you want to look at the Iraq-Afghan war, you want to look at the bailouts that went on during the housing crisis, or the massive amount of money that went on COVID relief, the chicken has come home to roost. And now they have to realize that you just can't keep expecting to have freebies out there without the cost coming in. So, Frank, it's going to be an interesting ride for the next 20 to 24 months, surely. But with that being said, let's not forget that during the 1970s, we had the same issue when we were in an inflationary spiral, and there were still very powerful rallies in the stock market during that period of time. It is interesting. You talked about Bitcoin, the old tortoise and the hare fable. It is interesting that when I'm looking for basically green over the last 20 months, and lo and behold, what's there? Gold. Gold is actually up 8% this year. It's up about 9% total in the last 20 months. It is that store of value that we often read about and people have been poo-pooing. And as I talk to more and more of the money managers at the Schwab conference, there is a reality that most of them were way underexposed in commodities during a big part of this inflation cycle, and they're going to go through readjustment in their own portfolios. And certainly looking at a lot of the oil names. Now, we certainly, with Hess being bought out by Chevron, but again, the inflation commodity names seem to be what will be the new lead group going into next year, and I expect we'll find that to be the case.
All right, hard to ignore that move in the cryptos, specifically Bitcoin. I know you don't have the laser eyes on, or maybe you do now after the last couple of days with Bitcoin above 34,000 again here at 34,505. It's been interesting to watch this rise here. And what do you think is propelling the cryptos here? Is there any reliable analysis at all that you've seen?
Yeah, well, the old Occam's razor that the simplest conclusion is probably the likely one. Obviously, that after the hit that cryptos took last year, it was concludable that they would certainly have a reprieved rally. But what everybody's been talking about is that it looks like the Securities and Exchange Commission is warming up to actually having ETFs that have Bitcoin in them and other cryptos. And if that happens, it's going to make it much easier on people to be able to use conventional exchanges to be able to buy the crypto world and not worry about the internal exchanges as they've been having their problems. So I think that there's a lot of people buying it on the pretext that is going to go through without a hitch. I'm not 100% sure that's going to be the case. I think there's going to be a lot of people asking the SEC, especially the Treasury Department with Janet Yellen, as she was very naysay on it before. And I think that there will be tough questions asked. And if they do, in fact, allow an ETF to use crypto, it's going to have to be under severe government regulations, which a lot of people in the crypto world do not want.
All right, we're waiting for a resolution on the actors' strike in Hollywood, and of course, the media stocks have taken the big hits this year, and adding to the economic angst certainly here in Hollywood and in the Los Angeles area. What about the media names here and the prospects for getting some sort of a deal done at this point?
I would take a good look at, with the automotive strike, the auto worker strike ending, the fact that you had Ford have a very nice pop. I would expect the same thing to happen with the entertainment stocks. Maybe not a new bullish run, but certainly they will come off their lows. And I had been a buyer of a lot of the bonds and the preferred shares of many of these companies. You know, frankly, it's sad that when you look at these strikes, again, history being a very good reminder, there were continuous strikes throughout the 1970s in various industry groups. It's always about the same thing. It's an inflationary pressure on wages, and that people want to pay a raise to basically, to offset this. We're going to have more and more strikes, and I do think, unfortunately, as we're going to be wrapping up some of the private sector strikes, I think we're going to have a lot more public sector or government worker strikes happening, going up right up through the election. So, unfortunately, it's going to still be a very topsy-turvy world on many, many fronts.
Certainly, and the Middle East, we're going to be speaking about the Middle East very shortly here with Rabbi Marvin Heyer coming up here later this hour, and we're following developments there very, very closely. And Israel entering its third week of the war against Hamas after the terror group infiltrated Israel on October 7th. As many as 7,900 people have been killed in the war on both sides, including at least 1,400 Israeli civilians and soldiers and 33 Americans, according to the latest reports we're getting here. Ken, obviously, the military back in focus, and again, being the market historian that you are, all of this happened on the 50th anniversary of the Yom Kippur War, and you've drawn some comparisons to what happened back then. But what can history tell us about what happens at this point, given the whole world on the pins and needles at this point?
Yeah, and Frank, it's just amazing that you talk about these very sad redos in history. We had many, many Middle East wars during the 1970 inflation cycle, and of course, a lot of it exacerbated the situation with crude oil during that period of time. I think it's one of the reasons I am recommending commodities to people, that during times like certainly with the tragedy in Ukraine, the tragedy in the Middle East, commodity prices typically go up. It was interesting. There was a bit of a debate going on about emerging stock or emerging markets, meaning, or certainly let's talk about buying stock in foreign markets. And obviously there were the proponents of that. They're the perma bulls.
We're all juggling life, a career, and trying to build a little bit of wealth. The Brown Ambition podcast with host Mandy and Tiffany the Budgetnista can help.
I'm not here to tell you what to do, but I'm here to tell you what I would do, which is I ain't filing for bankruptcy. Unless I owed $1 million, something crazy, then I'm like, if that makes sense. People be filing for bankruptcy for some old $10,000. No, there are other alternatives to filing for bankruptcy that won't curtail your ability to make money. You want to know some of them? Here you go. There's credit counseling.
Brown Ambition.
Wherever you listen.
These markets, and I found it kind of interesting because they were talking about how well they were doing, and I literally looking at it today, and yes, you can find some markets like Japan is up 9% after you adjust it for the dollar, but again, what you don't want to do is look at just this year. You want to look at it with 2022, 2023, with an eye at 2024, and the simple fact of the matter is there's very few places that you could go where you did not take some type of a hit. And obviously cash, people who are really scared right now, I understand why they want to go into money market accounts, with money markets paying between 4% and 5%. But I do caution everybody that if you do that because you're scared of wars and geopolitical issues, do remember that at some point in time, interest rates don't go straight up forever, and there can be a pullback, and those yields in money market accounts will go down. So I think it's okay as a temporary place when you're scared geopolitically, but I don't think it's a place you want to stay forever.
All right. Certainly, the bank scare that we had earlier this year, and indeed the three big bank failures, certainly hasn't been forgotten yet, Ken. And with these higher interest rates, things are still going a bit topsy-turvy. Any other big takeaways from the conference that you just attended about what's happening in the banking sector, and anything else that came out of that conference you just attended?
Yes, and it's actually, I'm glad you asked this because one of the big takeaways, and this is again where history plays an important role, that, I've been in the business long enough to remember when commission costs to buy stocks or bonds, it would cost well over $100 in commissions, and that was with, $1990. And so what happened was the industry went into this mode of saying, okay, we're now going to let you buy stocks, whether it's on the internet or whatever modem or medium you want to use, and we will charge you next to nothing to do the trades. But in exchange for that, we're going to keep the spread on the money sitting in the bank accounts. So what we're now finding, of course, is that firms like brokerage houses like Charles Schwab and a lot of the other banks have been basically honoring their commitment to low trading costs, but also not giving people the bump up as interest rates have gone up. You'll notice that a lot of money market accounts at banks and brokerage houses have simply not kept up. One of the things that came up, and I actually raised the question with some of the folks at Schwab, is that I'm of the opinion this could very well become a political topic going into the election cycle. You could just imagine congressional hearings about why the consumer is not being paid fairly on their money. And again, history being an important guide, there's nothing for free. And I do think there will be trend or there will be pressure on the investment firms to basically pay higher levels of interest, but in exchange, trading costs for stocks and bonds will go up. So there's going to be, again, this grand reset of all these things as we go through the next couple of years. And unfortunately, Frank, I wish I could give the audience a little more comfort just to say that, volatility does at some point calm down, but during this time of year, it can be very volatile. There's a lot of headwinds out there, but, there are places you can put money and certainly try to come out ahead.
All right, and speaking of that, Ken Winans, where are you putting money now and or taking it off the table?
Well, it's interesting. I'm actually, and I'm not as much as a big dividend player when you look at dividends for a lot of companies, especially when I look at preferreds, which, by the way, preferred shares in banks, and I'm talking about J.P. Morgan, Bank America, even the investment firms, Morgan Stanley, Wells Fargo, those preferred shares are now paying dividends as high as 7%, and those are dividends that cannot be cut. I would have the audience who's hungry for yield take a good look at that, because those banks, even though they're under pressure now, those preferred shares usually are something that you can buy into and be very comfortable with. I would certainly take a good look there. I know there's a lot of talk about going after dividend plays in the utility sector, and certainly any of those old, certainly real estate stocks have always been with REITs. I would just caution people that the old historical places where you used to find yield, I would be a little cautious on buying them until the earnings come out and you know where it's at. So, like I said, take a good look at the bank preferreds. They're worth looking into. And I just mentioned earlier the retail stocks. I think actually Christmas and the holiday season might be better than a lot of people are expecting. I would take a look at those retailers that have done a good job of controlling their costs and don't have inventory control problems. And one of my favorite names of the bunch would be TJ Maxx or TJX. I mean, the stock is actually up. It's actually been blue on my screen for the last 20 months, 12 months, quarter, and for the month. When I see something like that, it tells me there's more buyers than sellers. So I would look at something like that. Last but not least, the restaurants have been badly mauled for a good part of this year. Well, lo and behold, they were actually all up today, and they're up on the month. So again, as we go into the holiday season, people typically go out to eat. I would look at certainly Darden's, and I would look at Texas Roadhouse as two names that are niche in that area. So again, start finding those names that are starting to buck the trend a bit.
All right, Ken. Well, thank you very much for that comprehensive update. As always, we do appreciate it. That is Ken Winans, money manager and president of Winans Investments, author of Investment Atlas 1 and 2, market historian, and Forbes magazine contributor. Ken, thank you very much for coming to the line here this evening.
My pleasure, Frank. Good night.
Thank you very much. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby, ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that wasn't your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and yes, compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with the insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process. The team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Rough day for the stock market with tech stocks leading the way lower. The NASDAQ now in correction territory. That is a drop of 10% or more from its most recent high. Those magnificent seven, not so magnificent today. We see the NASDAQ closing down 319 points, back to 12,821. The Dow down 105 points at 33,036 to 33,036. The S&P 500 down 61 at 4,187. The yield on the 10-year note now at 4.95%. The price of oil down 16 cents here at $85.23 a barrel. Gold down about $3 now here at $1,992 an ounce. Bitcoin has seen a big pop the last several days, down about $160 now at $34,505. Ethereum down 33 at $1,788. And Doge now up a fraction at 7 cents. Mottek On Money continues here in 790 KBC. Following the latest developments in the Middle East, according to the Wall Street Journal, Israel has agreed to delay an invasion of Gaza so the United States can rush missile defenses to the region. Israeli forces struck targets in Gaza, the West Bank, Lebanon, and Syria. Joining us live now is Rabbi Marvin Heyer, the founder, CEO, and president of the Simon Wiesenthal Center and its Museum of Tolerance in West Los Angeles, one of the most well-known, respected, and influential religious leaders in the world. He founded the Simon Wiesenthal Center, named for the famous Nazi hunter, with the mission to confront anti-Semitism and fight hate across the world. Rabbi Heyer, thank you very much for taking the call here at this critical moment. Give us your view of things as they're unfolding here today.
Well, first, let me say it's nothing new. When we look at what happened during the Second World War, the same thing is now happening with Hamas and Hezbollah. The world we shouldn't be fooled a second time. We were fooled the first time with Adolf Hitler. We waited and we waited. He was gambling at the time. As a matter of fact, he first put in March of 1936, 20,000 troops into the Rhineland as a test to see what the West will do. What did the West do? Nothing. He was gambling because Germany was not strong enough to face the French army alone. But when he saw that the French army is doing nothing and that Chamberlain came back and said, peace in our time, Hitler said, I will do whatever I want. He went from one thing to the other while the Western world slept. The only person that didn't sleep was a man called Winston Churchill. We don't want to repeat that mistake twice. You're dealing with a terrorist organization. Hamas, Iran, what does Iran want from the world mostly? A nuclear bomb so that they can use it by threatening the world. Israel is a democracy. Do democracies make mistakes? We all do. The United States of America, the greatest country on the planet, makes mistakes. Israel also makes mistakes. But Israel is not going in the tradition of the Nazis, whereas Iran, Hezbollah, and ISIS are. They take 1,400 children. They took 1,400 children. That's something not heard of since the Holocaust. Where is their humanity? So when I hear the United Nations General Assembly, it repeats to me that the world slept when Hitler started. It took us years to find out and to save the planet. Do we want to make the same mistake again that we made then? The time has come to confront Iran, to say to ourselves, if the Iranians get nuclear weapons, they're going to use them. The greatest thing happened when the Nobel Peace Prize was awarded to a woman being tortured in an Iranian prison right now. That's why she was the recipient of the Nobel Prize, in order to wake up the world and to believe that Iran should be treated as a fellow member nation. It's a joke. It's like a repetition of fascism. Let's respect Mussolini, and let's respect Adolf Hitler and Heydrich and Goebbels.
Former Navy SEAL Mike Ritland keeps it real on the Mike Drop podcast.
He's the co-CEO of the All Secure Foundation, which assists special operations and active duty combat vets. Tom Satterley.
Nobody helped you shoot your gun. They trained you how to shoot your weapon. So we're going to train you on the things you've never been trained for, how to come home for more. Everything else that turns people away from it, we try to rebrand it.
Reduce or dismiss the kind of stigma that's associated with it.
You have to.
Mike Drop. Raw, unfiltered, intellectually sound. Wherever you listen.
So that's my response. Do the Allies make mistakes? Of course they make mistakes. I think the greatest statesman, Winston Churchill, without whom we would not have won the Second World War, he also made mistakes. But most of the time, he was right on. And so is the West today. So I don't believe that we should take the heat as if we're the ones committed the crimes, when in reality, we're the recipients of the crimes.
On the You're Live with Rabbi Marvin Hier. Rabbi, let me get your reaction to this. The House of Representatives adopting a resolution condemning the Hamas terrorist attacks against Israel. 6 members, all Democrats, voted present. The resolution marking the first non-speaker related vote by the House since October 3rd. Give us your reaction to what's playing out there in Washington as it relates to what's happening at this moment.
That is terrific that they voted. They voted correct. I'm very happy. What do you mean? What was the vote? I didn't hear the first part of what you said. I'm sorry.
Yes, the vote did come in 412 to 10. 6 members, all Democrats, voted present. This is being reported here. 6 of the 9 Democrats who voted against the House resolution to condemn Hamas attacks against Israel were squad members, with the remaining squad members voting present. This is according to a Fox News report we're getting here.
Well, that's a disgrace to vote. You mean the 6 who voted? As I said before, anyone that seriously picks up a book, reads about the history of Hamas and Iran and Hezbollah, any human being that takes the time to see what they're up to, how they treat their own people when they have to, knows that if we do not do the right things early on, we will repeat the mistakes we made in the late 30s, which cost the world millions of casualties. We don't want to make that mistake again.
My heart goes out to you, Rabbi.
Yep. Yeah, I just want to say 50 million people. Many people think that the Second World War was all about Jews. No, it wasn't. They weren't the only victims. 50 million people lost their lives for nothing because we were late in understanding you can't deal with dictators and with the ayatollahs who want to ruin the world. What you have to do is stand up to them.
On the You're Live with Rabbi Hier, and Rabbi, let me get your reaction to the Biden administration response to all this, and the report in the Wall Street Journal that says the U.S. is encouraging Israel to hold off until the U.S. can bolster defenses at this point.
Well, that may be if the United States needs more time because they haven't bolstered the appropriate defense. I can understand that, but I think that the only way to deal with this issue, and I say it all the time when I speak, is that let's not repeat the same mistake we made before, which was so costly to the world. And I congratulate President Biden that he went to Israel, delivered a great speech. I was invited to, I wrote an article that day I was invited by the Jerusalem Post, and I said in my article that he's doing the right thing. And had we done that early on in World War II, we wouldn't have faced the calamity that we have to repeat every year with ceremonies all over the world in every country because we were asleep in the beginning. Let's not make that mistake a second time.
On there live with Rabbi Heyer, and this is heartbreaking. Rabbi Heyer, I see that the Shoah Foundation will now collect testimonies from survivors of the October 7th Hamas attack. The Shoah Foundation, of course, documenting the Holocaust, and now this tragic situation here where we're dealing with the present day survivors of what happened on the 50th anniversary of the Yom Kippur War.
Yes, that is the right thing to do. To
Certainly.
Collect that material and to repeat it all over the world. That their first attack, the 1400, who did they attack? Elderly women and little infants. Which human being born in the image of God would ever think of doing that unless you're basically following in the footsteps of Adolf Hitler? I mean, nobody. I don't know anybody unless the person is abnormal in the Jewish community, in the Catholic community, the Protestant community that would look forward to doing that to little infants, absolutely killing them. And when they used enough bullets, they basically used other material so they can see the blood and all that. Who does that?
Unbelievable and unthinkable, Rabbi. Thank you very much for taking the call tonight. Anything else that we can do for you at this point, Rabbi?
Just to point out over and over, let's not make the same mistake that all of the Allies made in World War II. Many thinkers, with the exception of Winston Churchill, we all were fooled. Let's not be fooled again.
Rabbi Heyer, thank you very much for joining us live here tonight. This is Mottek on Money on 790 KABC. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby, ready to dive into your case. My friend, attorney Clark the Shark, is fearless for justice and your go-to attorney when injured in an accident that was not your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and, yes, compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident, 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Los Angeles ranking near the bottom on the latest list of safe cities. Yep, Los Angeles, out of 182 cities, surveyed down to 174 as far as safety is concerned. Actually, San Bernardino, the least safest in California, according to the latest survey from Wallet Hub, at 180. Joining us live now is the Honorable Dennis Zine, former Los Angeles City Council member and longtime LAPD officer. I'm sorry, we're going to have Gordon Chang on the air live with us now. And we want to follow what's happening with China and the Newsom visit, Governor Newsom visiting China today and what's going on there. Gordon G. Chang on Twitter, formerly known as Twitter, now X, of course. And Gordon Chang, thank you very much for taking the call here. Give us your reaction to what's happening there in China with Governor Newsom there.
Governor Newsom actually met Xi Jinping, the Chinese ruler, which was interesting. I think that the Chinese Communist Party really wanted to burnish its image, and so it met, the governor. The other big issue is the governor driving a car from BYD Company, an electric car. And this has attracted criticism, and I think correctly, because he was promoting a Chinese electric car, which means that he was promoting it over American electric cars, such as Tesla. There's a lot to come out of this trip, and as it occurs, I think we're going to find that probably the trip was not in the governor's best interest.
All right, and that car, by the way, goes for about $160,000, right? That's an issue is being made about that as well.
Yes, well, that was a top-of-the-line car. And I don't think really it's the price of the car that matters. It's just the maker of the car. because clearly you have a lot of issues when it comes to Chinese manufacturing, especially the subsidies. BYD has been the recipient of large subsidies. And in general, many of the subsidies that the Chinese government has lavished on companies, both state and private, have violated China's World Trade Organization obligations. Electric cars are part of the Made in China 2025 plan, which is a big WTO violation. China says it no longer maintains the China 2025 initiative, but clearly it does.
All right, and of course, he's there promoting global warming, anti-global warming measures, but in the meantime, China's polluting industry, obviously, has that been mentioned, you think, during their discussions?
Well, certainly climate change has been on the agenda. The governor's office has mentioned it because, he's a governor of a powerful state, perhaps the most powerful state in America. But nonetheless, he doesn't have leverage when it comes to negotiating with the Communist Party on climate change or other issues that are in general. If he's dealing with a California-specific issue, then yes, the governor does have some sway. But on other things like climate change, really this is public relations more than anything else.
All right, and apparently there's some memorandum of understanding there that he signed with Chinese authorities in one of the states. There isn't the federal government the only one that can make those kind of agreements?
Well, the federal government is the only one that can actually honor those types of agreements. California can sign whatever it wants, but it is really not going to be substantive. And this is important. I mean, what it shows is that China is really trying to improve its image when it comes to climate change. Because as you point out, China pours more carbon into the air than any other country by far. China is not making progress toward its promises that were incorporated in the Paris Climate Accord of 2015. As a matter of fact, that accord gives China incentives to pollute more because China said it would peak its emissions, quote unquote, around 2030, which means the higher the cap, the more pollution in the air, the higher the cap, the better it is for China. So this is not a good deal for the world.
All right. Well, we have on the line. We're speaking to Gordon Chang, a China expert, and what about China's military moves? We understand they're moving assets to the Middle East. Give us an update on what you're seeing.
There are 6 Chinese warships in the Middle East. This is reminiscent of what China did in 2013 at the height of the Syrian crisis, where China moved its most impressive warship at the time, a 689-foot cruiser, to the Eastern Mediterranean. And that was a warning to American and NATO vessels not to intervene in the Syrian civil war. What we're seeing is a replay of those tactics. Probably we will see these Chinese warships in some way start to work together with Russian ships in the area. And of course, that is of great concern to those countries that are supporting Israel.
All right. And anything else that you'd like to mention at this point, given we just had a heartbreaking conversation about the Middle East here and everyone focused on that, of course, also on Ukraine and Russia. But anything else that's top of mind here as it relates to what's happening with China at this point?
On Sunday, 2 Chinese vessels rammed 2 Philippine vessels at Second Thomas Shoal in the South China Sea. This is significant because the United States has a mutual defense treaty with the Philippines, and the State Department actually issued a warning that the United States was prepared to use force to discharge our obligations to Manila. Nonetheless, China ignored those warnings and is engaged on especially provocative behavior, which suggests that the United States is no longer deterring China, at least with regard to the South China Sea. And that, of course, is something that is going to concern the Pentagon.
Gordon Chang, China expert and author of The Coming Collapse of China, the Great U.S.-China Tech War, and on Twitter, formerly known as Twitter, now X, at Gordon G. Chang. Gordon Chang, thank you very much for that important update here tonight. And on the crime front, we'll be speaking to Dennis Zine at some point about what's happening with that really very disturbing Wallet Hub report that came out. We'll be taking a closer look at that as well. Right now, stay tuned for the 790 KBC News Blitz with Royal Oaks. This is Mottek on Money on 790 KBC.
In 1995, veteran police officer Michael Chappell was convicted of armed robbery and murder and has spent the past 30 years in prison. The true crime podcast, In the Land of Lies, explores the untold side to this story, one that could prove Michael Chappell is actually innocent. See why people are calling In the Land of Lies incredible, phenomenal, and a must-hear podcast. Binge the entire series now, and new episodes are coming soon. Imperative Entertainment presents In the Land of Lies. Get the podcast wherever you listen.